Let's focus on the Q3 updates which have been trickling in, and we've got Pralay Mondal, the MD and CEO at CSB Bank, joining in on the show right now. Pralay, hi, morning. Great to have you on the show, and here's wishing you a very happy new year from all of us here at ET Now, firstly.
Happy New Year to you also, Aisha, and all your viewers on ET Now. Thank you.
Right. Pralay, help us understand what the quarterly update is like, because from what I see, while your deposits have seen an uptick on a sequential basis, that's not the case with your CD ratio. That's seen a bit of a decline, right?
So, Aisha, I think that was a deliberate move because, as you know, that CD ratio is, with the kind of liquidity challenges which are there in the system, we consciously wanted to keep a check on the CD ratio because it had gone closer to 87-88%. So we wanted to bring it down a little bit purely from a risk management, liquidity risk management perspective. And that's one of the reasons where we ensured that our deposit growth sustains and we focus on deposits. And I think this trend will continue for a quarter or two more till we have abundant liquidity in the system.
Given that Reserve Bank of India wants banks to go easy on unsecured assets, especially personal loans, could that challenge your FY24 growth numbers?
Not for us, because that's more of a systemic issue. For us, we have not really done too much of unsecured business either on the SME side as well as on the retail side. We had just started, but we have slowed down a little bit because we thought that let's not catch this cycle at this point of time. We have enough other businesses to focus on. So from that perspective, some of the franchise and the credit cards and some of the other businesses we are picking up through our partnerships which we have. But right now, we are also going slow on the pure play unsecured personal loans.
Is unsecured, and what growth rate you think you will be able to maintain for FY25?
I think I have said that before that we should be able to do anywhere between 30 to 50% faster than the system. I think we should be able to sustain through the year. Maybe one quarter here and one quarter there can be a little different, but overall for the year, I think we should be able to grow around 50% faster than the system.
Highlight for us, what are the pockets where you've seen weak growth during the quarter?
Degrowth, you said?
Yeah, weak growth, yes.
Weak growth. For us, I think this quarter had been, we had been a little conscious on our credit growth because we wanted to understand where the liquidity ratios are, the CD ratios are, and deposits are not coming cheap anymore, as you know. So we wanted to ensure that we have the right balance between deposits and assets. So we had not a very aggressive quarter on the wholesale side. Some of the businesses also got a little postponed to the next quarter. And gold loan also has grown by around 23%. Which is slightly slower than what we generally do, because what we did is, gold prices fluctuated and went up significantly. We didn't want to ride that wave of gold loan price at this point of time. So we were a little cautious on the gold loan side as well, but still we grew by around 23%. Retail has grown well, but that's on a very small base, and SME has done well for us as well. So overall, that is how it will sustain. Next quarter, I think we'll pick up the gold loan because gold loan prices have stabilized quite a bit now. I think going into next quarter, we will focus back on gold loan, wholesale, SME, and retail will sustain wherever it is. And hence, we should be able to pick up the credit growth little better in the next quarter.
Target to achieve your 5% NIMs target for the full year?
Yeah, I'm still confident. Let's see. I mean, hopefully we should be able to manage that.
Okay, and can you tell us how you're progressing towards increasing your presence in the north and western region? Any targets that you have in terms of your branch expansion?
So we are adding around 100 branches every year. So out of that, roughly 50 to 60% we're adding in north and west. Rest of south also, we are adding a lot in Tamil Nadu, Karnataka, Andhra, Telangana. But a lot we are doing in Delhi, Punjab, Rajasthan, Uttar Pradesh, Maharashtra, Gujarat, Mumbai, Delhi, all these locations. So to that extent, I think, and we are taking a cluster and hub approach so that management is focused, so that we are not spread too thin, because as you know, 100 is not a large number, maybe for us, but from a distribution perspective, not a large number. So to that extent, we are using a strategic focus. The other big change we are doing on the branch side, on the distribution side, is we are saying that a lot of branches which are doing a lot of business in the gold loan, but they have potential of doing other branches. We are expanding those branches without adding the count of the branches. So we may take a first floor there, we can take a larger area there, and hence we are adding beyond gold in these branches. So effectively, those branches will become more productive from other products perspective. So that's the strategy and plan. We have started with 25 branches as a pilot project on this specific project which I talked about. And we will, if it's successful, next year we will go whole hog on that front.
Reserve Bank of India's proposed guidelines for small finance banks, strict guidelines on what the dividend payout ratio could be, strict guidelines, these are not guidelines, but this is like a paper right now up for discussion. What do you make of it?
I think it is small finance banks. I saw also yesterday something related to the foreign banks as well. So we are also going through it. It's too early to comment on that. But for us, I think our board will go through all this and decide what we need to do. We are a full service and a universal bank. So to that extent, we will be guided by the universal bank license. But broadly, I think there are measures which are being taken, regulators, what they think are prudent from a dividend payout perspective. So let's see how, when the final papers comes out, we'll see how it comes out, and then we can comment on that.
Just to wrap it up with one final point, if I look at 2021 and 22, there was a war of liabilities. Everybody wanted to acquire more CASA. 3 months ago, it appeared that that fight was over. And I also thought that the war of liability is over. But when we spoke to the State Bank of India chairman 2 days ago, and when I look at the deposit increases they've done in certain categories, look like the war is still on. So will 2024 be another year of war of liabilities which will impact banks and their NIMs going forward?
So, Nikunj, I completely agree with you that ultimately the core strength of a bank is the liability franchise. Rest actually are built on the back of the liability franchise. And hence, if you see the larger, stronger banks which had a sustainable growth decades after decade, always had a strong sustainable liability franchise, and hence it is and will always remain a strongest kind of a strength for a bank. And banks cannot depend on wholesale deposits or cannot depend on the kind of CDs and those kind of things or borrowings alone. So given that perspective, and in between what had happened is obviously the 10-year GSEC, both globally as well as India, was really coming. It was very easy, but now it had gone up. Now it has again sort of stable at a certain level, 3.98 US, and in India is around 7.2. So depends on what RBI also wants the liquidity to be in the system. It has broadly remained negative in the last quarter or more. So given all this perspective, I think everybody would like to have their dry powder for the growth for not only for Q4 but also for next year, because economy is giving credit growth opportunities without any doubt about it. As the capex cycle starts improving on the private side post-elections and things like that, I think every bank would like to have a source of deposits which is sustainable and consistent. So to that extent, I have no doubt about it that deposits will remain a key focus and key strength for organizations. For us, of course, we are a smaller balance sheet. It's a different way to manage that. And we are managing that. We are building our CASA franchise. It will take some more time. And hence, we have to deposit on deposits as well. We have an NRI book, which is slightly large. So from that perspective, we have a little more focused approach. But for larger banks, they have no choice. They have to focus on deposits as a major strength for the next few years.
All right, thank you for taking time out and joining in. That's the management of CSB talking about how there has not been too much business for unsecured loans. Gold loans have been slightly lower than usual, but as of now, the dividend policy by the RBI, too early to comment.